Was this the perfect jobs report and perfect scenario for somebody like you, Jim Lebenthal?
This was pretty darn good. This was
perfect
pretty
for me too,
good.
by the way.
I'll parry with you later because there's something serious I want to say. And as much as we enjoy it, there's something serious I want to say here, which is that there is a logic to today's move. Whatever your thesis is, all right, this jobs report, to your question, Scott, is what a soft landing looks like. And I'm really getting tired of these landing things, but let's just do it for now, okay? You have job growth, but you have an amelioration of average hourly earnings. That's what you're looking for, 0.3%. Yeah, we want it to come down further. I want it to come down further.
You just raised your S&P target yesterday thinking on the idea that there's not going to be a recession. This report today lands right in your lap.
And yes, and I'm sorry I'm burying the lead. The cyclical's killing it today is the logic of which I'm speaking. By the way, part of the reason I'm not going to parry with Steve is because there's logic to what he is saying, okay? 500 basis points of Fed rate hikes should have an effect. The simple fact is they haven't yet. I mean, you look at this jobs report, you look at construction spending, you look at ISM services. Yes, there are some warts, okay? But the idea that a recession, remember at the beginning of the year, everybody said recession, 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 recession. If that were the case, you would be seeing a negative jobs report right now. You're just not. And to Steve's point, if the Fed is pausing right now, the logic of today makes sense. And further, okay, taking nothing away from tech, the prices at which these cyclicals are trading are simply ridiculously cheap. That's where you should go.
Materials, energy, financials, discretionary. Cat's been leading the Dow for this early part, having its best day of the year. Russell 2000, best day, Jason Snipes, since May 17th.
Yeah.
Talk to me. Time to become more bullish or not?
I would say this. It's nice to see some breath in the market, right? And I would agree with Jim as it relates to the labor report today. I think the big thing for me is, one, unit labor costs. As we looked earlier this week, unit labor costs were down meaningfully. We had ADP numbers that were positive. We also had, obviously, job numbers that were positive today. Now, as we look at hourly earnings came down some, so I think this is kind of the Goldilocks scenario that the market is looking for, and that's why we're seeing the Dow push today, and they haven't participated meaningfully since the beginning of the year, and I think that's what we're seeing.
Bryn, you want to suggest that it's time to become more bullish on the market or not? Is it too much to make of a pretty nice move here of 600 plus on the Dow? We're pushing 4280 on the S&P.
It depends what market, right? We have two markets here. We have the 8 names that make up all the returns of the S&P, and then everybody else. And so I do think there's an opportunity as inflation is coming down. I do believe we'll have a 3 handle by the end of July. The jobs report today is flying in the face of the Fed, who wants unemployment, I think, to be around 4.5% by the end of this year. That is not happening. And so we have an economy slowing, but we have strong jobs growth. And I think that as an asset allocator, Scott, it's really important. We went into this year with the narrative of there's a wide range of outcomes. And I agree with Steve about why he has been negative. But where I don't agree is as an asset allocator, you want to have a wide range of, if you have a wide range of outcomes as your outcome. We owned the Qs, but did it via JEPQ with covered calls. We owned energy, we owned healthcare, we owned JEPI with more covered calls. So we were more defensively postured, but invested. And I think that if you end up anchoring on all this macro, you're missing the micro. I mean, because the S&P's up 10, the Qs, which has been like the best performing large cap growth manager of the last 20 years, is up 30% year to date. So get with companies or strategies that you can invest with so you can actually have an attempt to earn the long-term return of the stocks or the sectors. And that's what to me is like, that's the narrative today, because people who've missed it, who are trying to jump in NVIDIA after it's up 200%, they've just missed the boat and are continuing to go on that gerber wheel of